Today we're going to cover the liquidity, market structure versus liquidity or plus liquidity. But I'm just going to make it as simple as it can be. So example, here we have this structure here. Let's say that you have the market structure, which is bearish, the downside like that. You find that most people, they are told that a break of structure, you are told that the break of structure, a supply zone, I mean, or a demand zone is a level that leads to a break of structure. So whenever you have maybe a break of structure here, you're told that your supply zone is here, and most of the time people wait for the market to come here and sell to the downside. But most of the time, when you sell here, remember the standard or the logical way is that whenever the market push to the downside, it is a selling pressure, and most people put their stop loss here. This means that when the market comes back and the market's moving after one point of liquidity to another, then the market is just going to go higher, collect all the money for those who sold the move, and again, those who bought their stop loss is here. So what will happen? The market will start now, after collecting all the money and sweeping this level as well, start doing what? Going to the downside, and again, collect all the money here. Once it collects the money here, again, the most recent sellers are here. So this is where the liquidity is, and again, the market will just do this, go higher, collect all the money, this is your low, and maybe mitigate this level because it has now a higher probability after collecting all the money on the left, and we get that push to the downside. That's just one example there. So another example here I can say is this, whereby the market has something like that and to the downside. This year level, most people are told that the level that leads to a break of structure is a powerful level. So a supply zone, if it's here, we want to sell from this level to the downside. But most of the time, the market will do what? Will go through it because most recent sellers are here. And it can even go past that level and capture the whole move, because this is how the whole move look like this, and price will just go higher, collect all the money here. When everybody's buying, then we'll push to the downside. So let's go to the market structure and do something here. So when you look at this market structure here, when you look at this, what we are seeing from this structure is that we don't have a pullback here. So if the market wants to go to the downside, we want to see it giving us a pullback, then going past that level, and we look for a short position above the level. So here, around this zone, what I want to see is that the market has to give me a pullback here. So let's see, no pullback at all. Now we have a pullback, so this is our level that must be taken out. If the price takes out this level, then we will have a pullback here. This means that when the market takes out this level, when everybody's buying, takes out this level, and we'll be doing the opposite, looking for short positions. So that's the liquidity level. It has to be taken out. Okay, let's see what happens. Price kept going down. Okay, failing to take out the level. Okay, okay, now the liquidity level being taken out. The liquidity level has been now taken out. Once the liquidity level has been taken out, we can confirm our lower low here, and this will be our break of structure. If the market breaks this structure here, then we confirm our protected high. So let's see what is happening here. Okay, to the downside and break the structure. Once market break the structure, what do you have here? You have now your protected high here. You have now your protected high, and your liquidity is here. And most people will be waiting to sell from this level. And this level will not hold price. Why? Because this level itself is a liquidity zone that has generated the break of structure. So this means that above this high, there's what? There's some liquidity that has to be taken out. So the market, either it goes higher and collects the liquidity here, or it generates a new level. So let's see what is here. Price goes higher. And you can see here we have what you call order flow. Price can mitigate the order flow and push to the downside, but that's not a big deal. Okay, price goes to the downside. This means that your liquidity level comes here. And this means that even if you pick this level and you want to sell here, this level will not work because that level is a liquidity zone. It contains some stop loss as well. And we want to see price taking out the whole overall this higher because we don't have any other area here. Let me see. Okay. I want to see this high being taken out. But the most recent level is this one, but I want to see that level being taken out. Price kept pushing lower. Okay. 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 Now, the level is taken out and you can see this will be a first supply zone that you want to sell from. But this supply zone as well, it can be your decisional level, but at some point it can also fail. Why? Because remember the logic of the concept. It's not just about the concept. This market structure looks like this. Price went lower, went higher, collected all the money down there, and it has not taken out any other liquidity until it did something like this. So this can be a first liquidity zone, but don't forget that this high has also generated the big push to the downside. This means that the market as well, it has a room to go higher, not to close up there, but at least to take out the liquidity level and to continue dropping to the downside because this is a major zone that generated a sell pressure to the downside. But if, again, according to the rules of the concept, is that if we close above that protected high, we get a change of character. So those are the two things that you should always have whenever you're looking at this particular market structure and you're following this particular concept. So let's see, most people again will try to have a level here, the extreme, and you can see it has swept liquidity. It has all the rules and all the reasons to try to sell from here, but this one, it has a low probability. Let's see, because the market in real sense looks like this. If it wants to take out the level, it will have to collect all the money there, then a push to the downside. So let's see what is here. See, react here and fails and violate the zone. And again, let's see what happens on this one. Taps there, react, and does it respect the level or do you see what you get here? Price just goes above our zone here. Let me zoom in, clean. The highest point is here. This is our supply zone, and can you see? This week means a lot. You can see it as 1 week, but it means it speaks a very big language here. The price just went higher to collect all the money. So we never closed up there, and we should never close up there. So this one, we'll call it a sweep of liquidity. And once that level has been taken out, this was just the first liquidity. The one there is a major extreme liquidity here. So we'll have our lower low, and right now we want to see the market closing below this zone. So let's see what is here. Okay, you can see what is happening here. The market's trying just to take out an internal structure. If the market's pushing to the downside and does something like this, collect all the money and expect the market to continue pushing to the downside. So right here, our target or our idea is that we want to see the market closing here with the candle. Good. Broke the structure there. So if it has broken the structure there, then this is our protected high. Cause price went higher, collected all the money, and pushed to the downside. So here, what else do you want? We want to see the market taking out this liquidity here before we get another zone to sell from here. So we want to see this level being taken out. So let's see what happens. Here, But be aware, look at this market structure. This market structure has a lot to learn from. Pushed lower, first pullback, then there's the lowest point, price went higher, collect all the money here before breaking the structure and doing this. This means that this is our immediate inducement, of course, liquidity zone, but this is a push to the break of structure, which means that the market has a room to even go higher, sweep this level, and push to the downside. But for the structure confirmation, I just want to see the market taking out to this level, then drop to the downside. So let's see. Okay, the level taken out, that's good. Level confirmed. So most people try to sell here. But remember, this high also contains some liquidity, though it has swept some level on the left, so it's a little bit clean. This means that that area has a higher probability to push the price to the downside. So let's see what is here. If the market closes, the market can sweep that high as a form of taking out just liquidity. Let's see what happens here. Okay. Price, did it even sweep this level? Let's zoom in. Because it has to collect that level. Yeah, we did took out that level, you see. That is a sweep of liquidity. Market will always handle liquidity whether you like it or not. So that level being taken out, price can now push to the downside even without mitigating any level from the left here. So we have this sweep of liquidity there. And this level, you can see, was manipulated. So what we want again is to see the market breaking below this zone. Want to see the market breaking below this particular zone. Let's see what is there. Okay. Now I have that candle close, and this is our protected high. That is our protected level. And if that is our protected level, now we have to look for a new liquidity zone. The most recent liquidity, the most recent pullback is here. That I want to see it being taken out. So if we take out this level, then we confirm our lower low. See? Okay, level taken out, confirm our low here, and probably this can be your first supply zone to sell from, because the market, if you look at this market structure here, sweep some liquidity there. So this level has a higher probability to sell the price to the downside. But now look at this, that level has a higher probability. But if you're choosing the correct supply zone, then probably you'll be choosing this candle here, this black candle here, because this is the only candle that has imbalance. So let's see, does the market go to the downside? Okay, we see mitigation of the level, and if we close below this zone, then we have our new BOS. Okay, we get a new breakout structure. Once we get the new breakout structure, this is our high, and we need to look for our new liquidity level. Where do we get our new liquidity level? This particular high, the most recent liquidity that must be taken out for us to get a sharp sell. At least price goes higher, collect all the money, then we should look for sales. Now, let's see what is happening here. Price failing to take out that particular level, then this means that our new liquidity is shifting from there to around this zone. Yeah, so if we take out this level, and you can see these are what you call the retail order blocks. This level, it doesn't have to have all those characteristics you have learned, but these are very nice level also to look for a sell position. Yeah, there's some orders here. There's this topic that I'll first I need to take it through my private community, then later on I'll share, maybe public later on, but not right now. So let's see what happens here. This market structure, price takes out liquidity, and what happens? Mitigation of the level. And once the liquidity was taken out, we confirm we want to see the market now pushing lower and breaking that particular structure to the downside. So see, okay, breaks the structure. Now there's something that you need to want to share here. Market has broken the structure. This means that this is your protected high. But there's some scenarios whereby the market will do this, break the structure. This is your inducement, goes higher, takes out the inducement, this is your lower low, and the market will just go down without giving a pullback and breaking the structure. If the market goes like that, then this, even if this is a protected high, and this only, you don't have any other pullback here, then this means that this market structure in a different way, it just looks like this. Sorry. Just looks like this. And this means that for market needs to go higher, take out that particular high, and push to the downside. So I cannot go deeper than this. I cannot go deeper than this, but at least I'm sharing the ideas here. So this means that when I don't have a pullback here, because this is not a pullback here, this is what we call an accumulation, whereby the market will just trap you. This one is a supply zone, a very nice supply zone. But remember, any zone without liquidity is part of liquidity. If you don't identify liquidity, you become liquidity. So according to this market structure here, this means that my inducement or my level of liquidity that I want to see being taken out is there. This means that I'm not going to look for a sell until the market takes out this particular high, because this is the source of most sellers here. It needs to take out that level, and let's see how this level react. You can see price enters that level and goes through it, and you see past that level. That level will never hold, because no level holds the market structure without liquidity being taken out. So let's see what is happening here. If we take out that high, then I'll want to sell now. I think the high is taken out. Let us zoom in more. We can see that level has been taken out by this move. Now, once that level has been taken out, now liquidity, the market now can push to the downside without even mitigating anything. All right. Price can now, this means that now our low is now confirmed, and we'll be looking forward to see the market break this structure. But as well, something has happened here. Look at that. The moment the market went high and swept this level, the structure happened to change. So you need to know how to adjust yourself with the market structure. This means that this break of structure will come here like that, and this one you remove. And this inducement was here is the one that you brought here. So you just kind of did what you call liquidity transfer to that particular high. And now you did not have a supply. Maybe now your supply was around this zone, of which has not been mitigated. So we want to see the price now pushing to the downside and breaking the structure. Okay, there's no candle close. We said that a break of structure, we must have a candle close. So here, candle close, and now your high is here. And now where is your new inducement, your new liquidity is here. This means that you're not going to sell until the market takes out that particular type of liquidity. If that liquidity is taken out, then you're not part of the move. You're not going to try to open for a short position there. So let's see. Price try to go higher, and if it breaks this structure, then we have to look for a new inducement or a new form of liquidity until we break this level. Let's see. Okay, liquidity type 2 taken out. Okay. Now we have broken that structure. Now, if we have broken this structure, then my new liquidity zone is here. But I'll wish that the market goes higher and take out that level. But my first level to confirm my low is here. And as you see, my break of structure is kind of unique. I don't have break of structure everywhere. There's some areas I don't have a break of structure like here. There's no break of structure here. So let's see what is here. Okay, liquidity you see taken out and the price pushes to the downside. So where do we have this lower low? And now we have our break of structure here. And guys, if you wish to get more of this, just reach out through the contact on the description section. Don't forget to subscribe and share as well, like, comment, and let's see how this happens. So once we have that, we already have a break of structure, and market also we have what we call our protected high. So we want to see the market creating a new inducement, a new way of liquidity, and we see it continues to push to the downside. And we want to see, do we get another pullback? Right, let's see. Price breaks that low. Now we have our new liquidity zone is here. If price takes out that particular high, then again, we look for another short position. See, okay, you see, because most people will be selling from this level. That's why whenever you have a zone like this here, do not hold it. The price will react and still push higher. So once that level is taken out as a form of liquidity, then we have our lower low here. And this means that if you want to sell, look at this, your extreme supply zone will be, this will be a best supply zone to sell from. If you want to sell, but what do we have here? Apart from the supply zone, we have what we call the order flow. Order flow, yeah. So at some point, the market will just mitigate this order flow uh, and fail to go to your supply zone. What I mean is this, the price will mitigate the order flow and push to the downside because all of this is a zone of accumulation of orders, and hence the price doesn't need to push to your extreme levels. So let's see what happens here. Mitigation of the order flow. Okay, what happens? Price, you can see price happen to fail to push to a supply zone, but mitigated your order flow and pushes to the downside. If we get a break of structure here, we get a break of structure here, we confirm our high. Let's see. Let's try to go high again. And you see, price went higher just to mitigate this supply zone here, mitigated. Not yet mitigated, yeah, mitigated. So let's see what happens here. Now price breaks the structure to the downside. So here you have this high, and where's your new liquidity zone? Here. Price first, for it to go to the down, for it to go to the downside, it needs to take out that level before pushing to the downside. Something like this. Then push to the downside or create a new one. Let's see. Price creates a new level. We have a valid pullback here. Look at this. This is a valid pullback. If price takes out that level, we confirm our lower low. So let's see. Okay, the level is taken out. This is our lower low. And probably this is your order flow. Again, refine order flow, but the overall order flow looks like that. The last buy before the sell. That is the first order flow. This one is the refined one. I can give it a different color. Maybe let's make it look like yellow, like this. Now that's the same color, like that. All right. So again, this means that the market is likely just to come, mitigate your order flow, and a sharp run to the downside. Okay, mitigation of the order flow. Look at that. And after mitigating the order flow, the market, if it breaks this structure to the downside, we'll have our new break of structure here. So let's see what happens here. Okay, we get a new break of structure, and this means that these are protected high that should not be violated. And the next liquidity zone is here. So let's see what happens here. Do we break this structure here? Okay, price pushes to the downside, and these are your new liquidities here. This is your first pullback. Look at that. Price can take out this level and push to the downside. So this is your liquidity. Yeah, this one. But the best one, I'll always pick that one. So let's see. Taken out. Confirm your lower low. And remember, what is this? These are just orders, right? These are just normal orders. Now, want to see the market breaking this structure to the downside so that we can confirm our protected high. So what do we get here? Good. Break of structure to the downside. And once we have that, this is our high there, high low, I mean, and our new liquidity zone is here. So if this is our new liquidity zone, you see that again here we have a supply zone. So most of the time, most people, they want to see price coming here and they look for a short position. Sometimes the market will react and violate the zone and even go higher. And another rule is that we should not close above this zone, because if you close up there with the candle, we will be getting what we call a change of character. So let's see what happens here. Okay, see price taps on that liquidity zone and react. Does it respect the level? Okay. Price started again going higher, and look at that. Price later on violates the zone because of liquidity on that zone. But anyway, we have to confirm our lower low here. And after doing so, let's see what happens at the end of the day. Price. There's an order flow here. Look at this. The last sell before the buy, this one. Order flow mitigation, but you want to refine. This is the order flow. Price mitigates the order flow and attempts to go higher again. Okay, now we have our change of character. Price has broken that structure, and now we have our change of character. This means that now we are very bullish. And if you are very bullish, the market needs to do what? Calm down. Collect all the money, mitigate anything below there. Break the structure. This is the inducement. Then calm down, take out the inducement and break the structure to the upside. Those are now the things that you should be expecting the moment you get a change of character. But as for now, what I'm seeing here is mitigation of the order flow, and another order flow is here. Here's another order flow. But the price might just mitigate. For example, if you fail to see an inducement, then you're likely to see the market coming here and a push to the upside. So let's see what is here. Okay, price we see, we failed to come even to the downside, and we have our first liquidity zone that has to be taken out. And remember, also trading from the left does not work, because look at this. This was an order flow of which was first mitigated, and maybe some people will try to refine this order flow, because people like trading from the left, whereby they can pick this area. Let me remove this order flow. Some people will pick a zone like this. You see, we have a very nice zone here, sweep of liquidity, and they will want to pick maybe this black candle here. They want to use it as a supply zone to sell. But the market does not respect anything from the left. If you want to start understanding this market, work with the most present time. Look at this area. Again, this can be extreme, and you have that level of accumulation, and some people draw it again here and want to sell from here. Look at this. We already have a change of character. Anything from the left will not work. Those levels from left, they only work when you don't have a change of character. So let's see what do we get here. Price mitigate the level. Look at that. The first trap, can you see? Reacts as if it's gonna go down and goes higher to the next level. So this one become a failed level. And look at this. For me, I'll need to put my liquidity zone there. I just want to wait for that liquidity to be taken out then to sell properly to the upside. Look at this. to buy properly to the upside. Look at this. This is another level of liquidity. You trade from the left, price reacts like that and happen to do what? To fail. Look at that. Price comes down, 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 and you see, fail even to take out this level, and price trying to do what? To collect all the money, because most people are selling on this level because they are looking on the left and they want to look for those levels to sell from. So you can see when price goes higher, then my new liquidity zone is here. And you can see those who are selling here now, they are feeling the pain. Look at that. Price now takes out that level as what? As a liquidity zone. So for me, you realize that those who are selling, they continue getting more losses and more losses. And you see, people get, even myself, I'll be honest here. I used to struggle a lot. So when my level get broken, I used to go back again and I look for a zone on the left, then I do this again. This is the mistakes I used to do. Then I do this, I bring it here. Then what happens? Market again. You see, react as if it's gonna sell. See it goes higher. According to the right rules, this is what we call the liquidity. And probably if I am marking the right way, then I want to buy from this one, this level. And this is just my order flow, the last sell before the buy. This can be my order flow. Order flow here. This can be my order flow, whereby the market sometimes it will just come react to that order flow and go higher. But if it comes to the order block, demand zone here, for example, this is my demand, then I'll be buying from that particular demand. So let's see what is happening. Okay, press test out that liquidity. Can you see the order flow? Press rest to the order flow. And if you go to your low time frame and you don't see the confirmation, wait for the market to go and hit your high time frame demand zone. So look at that. Price plays around and boom, hits my demand, and the order flow now is still there. So this is the high. And let's see if the market breaks this structure, then we look for a new liquidity zone again, because we have to wait for that liquidity to be taken out before you do what? You mark your level. So price mitigated the demand and start going higher. And you can see here, this market first collected all the money here, all the money to this low. So this means that if the price has gone higher, this is a very, very nice zone that can act as your demand. If the price returns here, example, if the market comes back here, it can pump to the upside properly. Let's see what do we get. You see, taps here and tries to go higher. Go higher, and what do we get? Boom, break of structure here. So once you have this break of structure, once you have this break of structure, this your lower low is here, and you need again liquidity. Where's the liquidity? The most recent liquidity is here, and the extreme major liquidity is this particular low. This is your major liquidity, because the market return here, this is where it goes, the force to go higher. So if it wants more liquidity, it needs just take out this liquidity. The order block is already mitigated and push higher. So let's see. Okay, this means that our liquidity is now here. And okay, let's add to liquidity and let's see, do we take out our major liquidity zone? Okay, liquidity zone is taken out to the major one, and this is your high, and you'll want to see now the market to go higher and break, sorry, not broke, break that structure to the upside. So let's see. Okay, good. So the market has broken that structure to the upside like that, and this is your lower low. So where do you have a new liquidity zone? This particular low here. This low is your liquidity level. And if the market comes here and you try to buy from this level, most of the time the market will do what? Will do this and violate the level. So it can go higher, collect all the money here, and again the push to the downside. So you need to be aware of everything that is happening on the market structure. So for example, your first point of interest should be around this zone here. But again, always be careful that the market, if it wants to go to the downside, it'll have to break that structure and you get a change of character. So let's see what is here. And you see, taps on that level and try to react and goes to the downside. And now whenever you have a zone like this means that the market is now bearish and you prepare to start looking for sell position. Look at this. This is now your valid change of character. And this is your high. High there. And now you need a new liquidity phase. Maybe this can be your first liquidity. That must be taken out. Sorry. This one. But the major liquidity that you need, where did the market start pushing to the downside? Look at this. Price started from this high. First pullback, second, so many internal and higher here. Boom, here. So the market will take out this one. And if it wants to go there, it can do something like this. Take out the one internal so that it get a pressure to go high, collect all the money, and again, push to the downside because we already have what we call the change of character. So my major liquidity zone will be this zone here. My major liquidity, where is it? Where is it here? And probably if I want to sell now, I'll be looking to use this particular candle here because it has the imbalance and push the price to the downside. So let's see what happens here. Do we? Okay, market creates a new liquidity, so I'll move to this one and let's see. Okay, if that liquidity is taken out, then I'll have to confirm my lower low. Okay, price playing around like wants to go higher. So if the price wants to go very high to the upside, it needs to take out what we call the internal liquidity. And if I zoom in here, the most recent pullback is this one. Once we take out that level, like this, let just use this one. Then this tells you that the market wants to go to the extreme. So this is our level. And probably once you take out this level and you don't close below it, this candle closing above it, this can be our first demand, whereby the market just needs to come here, mitigate and push to the upside. So if you want to buy, let's say you want to buy, you can put this one here, put a stop loss just below here, because I don't think if the market is going to go past that level. And let's see. But the market will do anything. I'm just giving you examples here. Let's see. Price went higher. No candle came back. But this is your valid demand zone. If the price decide to come lower, okay, decided to go higher, it never came back here. So the market will keep going higher. And if you don't understand, most people will keep doing this. Come here, you look at the zone, you draw like that. You want to sell from there and the market doesn't sell. Look at that. React and goes higher. Reacts and goes higher. Look at that. You see, price try to play around. So you're going to notice that the market will play with your mind until you'll give up. So let's see what happens here. Okay, goes higher, higher. What happens? Kind of returning to. So according to this internal structure, look at this. Let's pull back, second, and goes higher. This is your liquidity zone. This is your normal liquidity. This is extreme. And if the price goes back to your demand, like here, this order block, and it can take you to the upside. Because most people look at this. This is a liquidity zone, and most people are trying to use this level. This one is a level that people want to use here, mitigation, and they try to look for short position here. So you realize that in terms of internal liquidity, this is your internal low that led to that break of structure. And now you see when you have an order block here, we'll try to react and get violated. And where do you have your extreme level? Your extreme Your extreme liquidity is here. Price needs this liquidity. Once it takes out that major, we call it the major liquidity, then it will go to the upside. So the order block, you can see this here, valid order block. If the price taps on that order block, it's likely to do it, to take you back there. And later on now, when you want to sell, because that's the only level you have, you can sell it from. Let's do this here. Just put your stop loss above it, and then always target your low. So let's say here. So we can target around here. So let's see what happens. Okay. The market never mitigated this first OB, because this was the OB that if it mitigates this level, then you do what you buy. So it kept going higher. Okay. So this means that we need to continue. The mitigation of that level, look at that, and boom. We're now bearish to the downside, and you can see that's where we are right now. In fact, according to the market structure, you see, this level failed to come here because that was an internal structure, but market took out a major liquidity level. So this level price never took out that level. But now we have a break of structure to the downside here. We now have the break of structure here. A new break of structure after taking out what we call the major liquidity level and mitigating that level. So what else do we have here? We can see according to this market structure, price went higher, took out internal liquidity. Now these are our low here, and have this. We need to break that level. We need to break here. So the market can decide to go higher and mitigate one of these levels here before pushing to the downside, or it can just break the structure. Then this become your liquidity zone. Then price will go higher, mitigate that level, and drop after using this level as a liquidity. So guys, I'm going to reach there. If you want to join our community, reach out through the contact on the description section, and also you can join our Telegram, whereby I share ideas, and also you're going to improve from there. So guys, thanks for watching and subscribing this as well. We'll see you on the next video.